Buying a home is a big decision. It's even harder when the market is a roller coaster. Tariffs are like extra taxes on goods. This can make prices go up and down. When prices are unstable, so are mortgage rates. These rates determine how much you pay for your loan. It's like the price tag on borrowing money to buy a house. Don't get discouraged. Understand the market. Then you can make a smart choice. Knowledge is power. Timing the market is tricky. It's like trying to predict the weather. But you can watch for signs. Keep an eye on the news. Are tariffs going up or down? Is the economy strong or weak? These things affect rates. Talk to experts. Find a good mortgage broker. They can help you understand the market. They can tell you when it might be a good time to lock in a rate. Remember, nobody has a crystal ball. It's about making the best decision with the information you have. Before you jump into a mortgage, check your finances. It's like making sure your boat is seaworthy before you sail. Lenders look at your credit score. This tells them how good you are with money. Pay your bills on time. That helps your score. Save a big down payment. The more you put down, the less you have to borrow. This means lower monthly payments. Get pre-approved for a mortgage. This shows sellers you're serious. It gives you an edge in a tough market. Though, there are different types of mortgages. It's like choosing the right boat for your journey. Fixed-rate mortgages have the same interest rate for the entire loan. This gives you stability. You know what you'll pay every month. Adjustable rate mortgages, or ARMs, have rates that change. They might start low, but they can go up. ARMs can be risky if rates climb quickly. Talk to your lender about which type of loan is best for you. Don't be afraid to ask questions. It's your money after all.